Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Friday, March 18th. It is 6:52 as I'm starting the video. And as always, please run your player at 1.5x. Got a lot of content to go over this morning. Taking a quick look at futures. Got a lot of red across the board, but not too bad. Oil standing out. Up 1%. That's after a 9% pop yesterday. Copper fractionally green. Equities down about 0.6 across the board. Gold's down about 0.5%, but had a good day yesterday. Macro front and center is the big March options expiration, biggest in 3 years. So we're going to have a ton of deltas roll off. Could set up for both a volatile day today as all those options change hands and then end the next week where there will be a whole big repositioning of the options market for April. And the question is, do people start buying calls or do they start hedging with puts after this run up? It'll have a lot to say about whether we can power higher or it was just a kickback rally within a bear market. So that'll be really, really important. The only other macro news today is leading economic indicators. I think they come out at 8:30. That'll be interesting to watch. So let's look at the VIX. We had the many days above 30. Now we've broken that, and now we've dropped below 26, which I think will serve as a nice pivot point for us today and moving forward. You can see we had a lot of reactions back here along the line of 26. So on your dashboard, you can kind of look at 26 as not necessarily a go, no-go line, but if you pop above 26 and start climbing, it's more about the trend than the actual level. But I think right here at 26, if we can stay below, that'll be certainly a positive for the market and cautionary if we pop above and trend higher throughout the day and then in the next week. Jumping over to SPY. Really critical spots. On the charts, this is a little busy, but I want to point out the critical levels. Yesterday, gold line is our 200 EMA. Always a good thing when you recapture a critical moving average from below. So that was very positive. But we're right here at 440, where you can see in green the 50 EMA is coming down. That's really going to be a toggle point for us going forward. If SPY can recapture 440 and hold it, then that opens the door for moves higher. What I've done here in this light blue color is drop in the Fibonacci retracements off of this big move. So going from high to low down here, you see where the fibs come in. We've already exceeded the 38% retracement level, and then the next big level above is going to be at 445.52, and then we've got a big trading range up above at 450. So I think those are the if we can break above 440, those would be your upside targets here at the 50% retracement, and then you got the trading range at 450, and then you've got a 618 at 453. I would imagine, what we say all the time, you break back into a trading range from below after having dropped outside. Once you break above 450, then your default target is the top of the box, and that would put us right back up at the highs. A little early to kind of make that kind of call, but just looking ahead on the technicals, this 50% level will be huge, and 450 will be huge. Looking at this double bottom low, we had put in our technical targets. We had a 3% double bottom setup. That triggered the other day, and lo and behold, we made that target here, and you can see where the 50 comes in right here at 440. So that's going to be kind of our toggle point for today. Now we're going to open below this morning with the red open, but what you can do is, we're going to open below. So if we come back up through 440, that would be a big positive sign. And then what you can do is be long against 440 on that recapture, and maybe we get a run up to this open gap at 444 for the a strong finish to the week. So I think it's really important today just to realize that we do have the big OPEX. I believe there's always that potential on any OPEX, but today it's kind of got 3 exclamation points after it, just because of the sheer magnitude of the options flows. And so volatility will really increase, I would imagine, as we get closer to the close this afternoon. And I would just throw out the caution, like after 3:30, it could get wild. It's not a guarantee. It's just a possibility that if you had, some really nice gains on the board at 3:30, I would consider just taking it off and, congratulating yourself on a good day and hopefully a good week, because you don't want to be sitting there and have some wild bars, in that last half hour as all these options work towards expiration. You could get, literally wiped out in one bar. So if you're an active trader heading into the close and you're sitting on a good gain, then, just book it and start your weekend early. Just moving on to the 30-minute chart, just a magnifying glass. We had the double bottom, 3% measured move. We got it right here at 440. Be aware of that gap. If you broke in above 444, then you might get a flash move up to 446 to fill that gap. Qs daily. Not in as good of technical posture as the Qs. Why? As SPY. Why? Well, you got the 50 below the 200. That's a bearish posture. You can see we haven't had as strong of an advance in the Qs, but they're making progress. So our next technical objectives above where we are now is we've got this level here at 347.50. Then we got the 50 EMA that comes in. Let's call it 351. We've got a little gap. Then we've got the 200. So more work to do here. What I've done over here is just give you the Fibonacci retracement levels for the entire move from high to low. These are where the fibs come in. But more work to do, but starting to make some progress. I think a really, really big line on this chart is this 360. Why? You would have recovered the 50, you would have recovered the 200, and you would be right at the 50% retracement level. You break above 360, you're going to get a lot of technical buyers stepping in, I would imagine, on the recovery of the 200. That's a big line for a lot of institutional type players and algos. They just won't go long below the 200, and once you recover that and pop above that 50% retracement level, then oftentimes that gives them a green light. And just remember that 50% retracement is a very, very common level, both when you're in an uptrend and when you're in a downtrend, to have the initial move down, a 50% kickback rally, then a fail. It's not a prediction. It's just when you're going in an uptrend, you wouldn't be panicky about a 50% retracement pullback in an uptrend. It's just, that's by the dip. And if you're in a downtrend and you get a 50% retracement rally, that is often a place where you sell the rip. You stay with the trend. So that's going to be a big, inflection point, if you will. Moving on to the 2-hour chart quickly. What I've done here is, by the way I have these arrows, could be choppy. We've got this trading range here. We've got a large volume over price bar coming in right in the middle of this trading range, which is where we're at. We've got the 50 above right here at 350. So I wouldn't be surprised if, we may open low down here at the bottom of the range and, make a move up here towards 347.50, and then that'll be an important point to take out this large volume over price bar and this trading range. You get above 347.50, and there would be an impetus to come up here and at least tag the 50. 30-minute chart, nothing particularly insightful here other than to just give you a magnifying glass on where the gap is, and then you've got this 347.50 area. If we're going to be down 0.5%, we're going to be kind of in this area here. If we open below and then recapture 342.50 on the way up, that might be a nice place to get long and see if you can get a move up towards 347.50 if things stay bullish. IWM is getting more interesting. We've had this big consolidation range. We made a nice push yesterday, up 1.5%, but we're coming up to the top of the range, and we've got this big 1-year consolidation above that starts at 210, and just from basic technical principles, if we have a big $20 consolidation below and then we break above, just on the face of it, you'd say you'd expect a $20 move, which would put us way back up in this range. And then, if we break back above 210, again, breaking back into a long-term consolidation area, your target would be the top of the box, back up here at 232. So we're getting to a point here where some resolution would probably be expected. Notice we're still below the downtrend line, still below the 200. So you can't get particularly bullish here with the full bearish stack, but and below the trend line, but we have recaptured the 8, the 20, and the 50-day moving average, and we're coming up to the top of the box. So I would expect you get a breakout here above 207, fill this gap, then you can make a run to 210. Just if only for a simple, tag of the bottom of the range, where I would expect it. I mean, one of two things is going to happen. It's going to break through or it's going to be rejected. But given that it's below, your bias should be to the downside. Resistance is resistance until it's taken out. But that will be a very, very big pivot point there at 210. You can see that yesterday we stopped right at this gap at 205. If you can break that this morning, then I think you got a run to 206.50 on the 30-minute chart. Facebook is making some good progress, up 2%, coming out of this consolidation area at the lows, broke out of the 60-minute downtrend line, and it's made good progress up here towards 208. What I wanted to do is jump over to the daily chart and show you kind of where we're at. We yesterday recovered the 20, which is a bullish technical event. And then we've got a level here at 212, that I think if it can get above that, then you would have some runway to the upside. So if you were bullishly inclined and you wanted to take a bit of a longer term view, if you got above 212, I think that would be a good pivot for, looking out in time, maybe some April calls, at 220, 225, and just say, okay, I'm going to give it a couple dollars of wiggle room to the downside. Say put a stop at 210, you get in at 212 or 213, and then you're looking for a move up into the 225, 230 range. I think that would offer a decent risk reward area. You notice here that we had the high right here at 212, and you'll see that on the 60-minute chart as well. But if things are going to get all bullish, it wouldn't be that unusual for a move back up, even if it's just to touch the declining 50 here, which is way up at 240. I mean, that would be a great tactical long if that were to play out. And, that'll be a game time decision just kind of based on everything is going on. But I think that 212 level is going to be relatively important and a good pivot to use. I was kind of frustrated with Apple yesterday. I mean, it was up $1. I still have some 160 calls. They expire today. Apple's down a little bit. It's trading at 159.50 right here in the pre-market. I was hoping yesterday for a flash fill up to 163. So, I mean, I think that's the trade today. If you're not in and things get bullish, have 160.50, 160 spot 50 alarmed, and you get that break above, look for 163 if things look bullish. So I got my fingers crossed now that plays out. That'll be a good win. But if it doesn't do something fairly early in the morning, I probably have to close out and then wait, just re-alarm it and either get something next week or have lottery tickets for today for a move up to 163. Tesla had a great day yesterday, up almost 4%. a couple nice technical events. First one being we recaptured the 200 at 856. We broke above this 860 line, which we had identified yesterday as an important level on the chart. Why? Resistance, 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 bunch of support, resistance, support. So that was an important line. We broke above, and look where we stopped, right at the top of the prior range, right here at, let's just call it 880, a little bit below. So today, I would use that, 878, 880, wherever you feel comfortable is your pivot. You get a break above. You've got the 50 coming in at 891. And then you've got a layer of resistance at 905. So on quite a nice run here on Tesla. So I think that 878, 880 is going to be your pivot for today. Let's take a look at the daily chart. I don't know if I really updated it. Oh, yeah, this is what I wanted to point out. You see the 50 coming in, and then I've got it here at 900. This would be a really big level. Why? Because look at all this trading that happened between 900 and 930. So if it can recapture the 50, break above 900, then you're going to be back in this trading range with a target of 930. Microsoft. I tried this one yesterday. Got really frustrated with it, actually. We had a break above 294 and then had a pretty big pullback. It looked like it had failed, and then came down here and then had a grinding type of afternoon. Broke above 294, but the good news is that we took out the downtrend line here, and we broke above that lateral resistance, and we're right at the point of taking out this large volume over price bar. So that has really cleared the way technically for a run to 301. So I think you can use 294 as a very nice pivot today and into next week. As long as it holds 294, I think there's a very good chance for a run towards 301 and then back on the upward path. Amazon has been on a great run. We had all these levels identified. We took out this trading range in this high volume bar here, and now we've moved up to the next high volume bar right here at 3150 with remember the free 50 the free 50 club that used to be work for us so well back in the day. Well, you break above 3150, I think you got a good chance at 3200. And if 3200 goes, I think you can go to 3250. It's a little extended, but it's certainly feeling it. I think 3100 is going to be a nice pivot because of this large hot volume over price bar. And for you budding traders out there, I would really like to see you incorporate the volume over price profile into your charts, because you'll notice that it almost pre-identifies the key levels for you, the major ones. High volume over price bar here gives you a level. Here's another one, here's another one, and then on these voids, when you take out a level a high volume level, there's often a void on the other side where price can move more quickly because there's not the congestion tends to lie in nodes, and then when you go into the valley or the void, there's not a lot of people there to offer a ton of resistance. So that is where price can move quickly through that area. And these voids can be big or they can be small, but they're usually there. I wanted to show you the daily chart on Amazon, something fairly dramatic. Why? We got a double bottom, and we've got that classic W formation. Here's the left side, here's the middle, and here's the right side. If that were to play out, the measured move is back up to the highs. Now, again, it's not a given, but we've seen on lower time frames, that technical move has played out time and time again. And you can see right here how important this 3175, 3200 area is. Why? Well, just for the reason that I just said. You've got a I'm not going to call it a wall, but you've got a significant area of resistance here with all this congestion. And so if it was going to fail, I think it would be very soon. It would either be right here at 31.75 or at the 200, which comes in at 32.27. Come up here, get rejected, and go down. But if it takes out the 200, I would certainly think that this measured move could possibly come into play if everybody goes batshit crazy, long bullish the market. Google daily chart, again coming into a critical spot. We've got a large volume over price profile coming into play, and we got the 50 that comes in at 26.98. Let's just call it 2700. I think that's going to be an excellent pivot for you swing traders. You get price to take out 2700 and the 50. That gives you a beautiful line to shoot against on the long side. And as long as it stays above 2700 with a stop somewhat below, you can stay long and see where this thing takes us. I'm going to go show you the 60-minute chart for active traders. See, we've got the same double bottom look that we've shown on a number of charts already. A low here, a low here, with bullish divergence, not so much on RSI, but here on momentum, we've got a 6% height of the W, and so you break above, then you've got a 6% measured move, and we're right here kind of at the decision point. We have this a lot of this trading right here where the top of that range is 27.10. So you break above that and take out the 50 on the daily chart, that measures up to 28.20 on a 6% measured move, which is nothing to sneeze at. This is the NFLX chart on the daily. The reason I wanted to show you this, we know the disaster, the big rug pull. But if you look at it, we had a low here, we had a low here, and then we had this trading action here, and now we've broken above That looks a lot like a bear trap. You break below the prior lows. Everybody, piles in short. I mean, that's the technical move to make. When you break a low, means you're going lower, and it did go lower, but now we've recovered that. So everybody in here that was short is now realizing that they're wrong, and then we've recovered the 20 EMA. The big feature on this chart is the large volume over price bar, and then take note of the 50 that comes in up here at 420. That's going to be what I would assume would be the next big technical target. Let's look at the 60-minute chart real quick if you want to get actively involved. You got a line here at 370. Was resistance back here. Gave you a little bit of support back here, but here was a line that it overcame yesterday, and it broke above the 60-minute downtrend line. So from what I can tell is pretty much an open path up to 380, and it breaks that level, then you get to this high volume bar up at 390. So I think you can stay long against this 370 if you're like a super active trader today, and see, if things are bullish, get a run up here to 380. That would be a nice little day trade. Semiconductors, nice day. Well, not really. 1.6%. AMD was down 5% yesterday. I don't know why. We're coming into this trading range. We've taken out the downtrend line. As long as we can stay above 262, you've got an intermediate point here at 266, and then the big line in the sand for semiconductors is 270. Why? You got the 200, you've got technical resistance, and then you've got the 50. So if you were a swing trader on the daily time frame and price was able to recapture the 200, the 50, and technical resistance at 270, then you got a really, really good line to shoot against on the long side with those moving averages below and technical support below. So if I was, sitting there without a position and I'm looking for a long on the daily time frame, I would be keying in on 270 for that. Going to go a little quicker here, just covering some stuff that we've been looking at. Bracket trade on DocuSign. Good day yesterday. We're making progress inside this gap. Looking for a move to complete up at 93.5, 94, something like that. Making good progress there. So that one's working. COUP, not as easy of a trade. If you got in down here and you bought some time, then it's working. We had a good opening bar, but then it didn't do anything the rest of the day. I think you can stay long against 80 if you're in that, if you're active. Looking for a move up to 90 to fill that gap. Sent out a note yesterday about Allstate. Nice weekly chart setting up. I don't think it's anything like you really want to take right now, but you get a weekly close next week, a breakout above 135. That will give you a ton of support to shoot against. All this area will be support, and then we can just camp out long above 135 if price can prove it for Allstate. One of the things I hope I'm not talking out of turn here. I'm not kind of any insurance expert, but a rising rate environment is generally good for insurance companies. They've got a ton of cash reserves that they got to keep on hand for payouts and stuff like that. But they get boosted returns when they can put that cash to work at higher and higher interest rate levels. So, Berkshire, that has Geico and all these other companies, is doing well, and the insurers are doing better in a rising rate environment. And you may want to go look at a bunch of insurers. I haven't done that yet, but I plan to see where the technical levels are on the various insurance companies, to see if there's some other stuff developing that we can take advantage of. I'm going to run through ARC real quick. If things are going to stay bullish, these beaten down names are outperforming. We'll go through and look at ARC, but a lot of them were up 4 and 5%. We talked about that yesterday and the day before. You got a level here on ARC-F. It took out the 60-minute downtrend line yesterday, which is bullish. You got a level here at 28, 28, 25, something like that. You break above there, I think you could come into the 29s. You've got larger volume over price bar here. If it can get through that, then you can make a run up towards 31, 31.50 on ARC-F if you're interested in that. The genomics one, still below the 60-minute downtrend line, but you get a break above 45, 45.50. Then you can get up into the 47.50 range. Might be something you want. ARC-K is your proxy with Tesla. If those $1,000 options are not your thing, then you can use ARC-K as a proxy. Tesla's their largest position. So coming up here towards the downtrend line, I would just alarm 65. Why? You got a big trading range here, and then you got that void that we just talked about here that would open up towards 69, and I think that would be a lot faster trade than trying to get it here with the downtrend line and lateral resistance here. I would just mark 65 and be ready to go and look for a $4 move up to 69 if things are bullish. And if you're trading ARC-K as a proxy, then of course you're going to want to alarm key levels on Tesla that, if you start getting long alarms on Tesla, that's going to give you more confidence on ARC-K. So keep that relationship in mind. ARC-W coming up to a key spot that I've got here at 82.50. If you wanted, you could move that level up to say 84. Then you've got another void in the chart that would open up the door towards a move between 89 and 91. If this thing is going to get bullish, you've got a somewhat of a void here in the charts. And I think once you cracked above 83, 84, then I think you got $5 as a target on the upside. And let's wrap up here with FedEx. They reported earnings last night. You can see that we had a low back in October. We came up, was rejected. We had a breakdown recently, but then that level was recovered. Again, that looks like a bear trap, but price moved up to the 50, and then last night, disappointing earnings, down 5%. That'll leave a gap in the chart. If you want to set that up as a bracket trade for Monday, you're welcome to do that. You may want to mark that early if you want to. If traders think that was overdone, they might try to flash fill that gap today, buy it up on the dip, or they may take it the other way. So you can use that opening low as somewhat of a pivot, that if they break above, they're in a gap back up to the 50, or they could say, you know what, disappointing news, bring it back towards 215 at these prior lows. So let's wrap it up there. If you're new to the channel, thank you so much for spending some time with me. Hit the subscribe button and the alarm bell if you want to get more objective content like this. Not a lot of chatter, not a lot of ego, just levels that you can execute around, and maybe if we're all lucky, we'll make some money. Jump over in the show notes. You'll find a place to get a link to the blog site where you can drop in your email address and get my content morning, noon, or night right to your email box. Let's wrap up for today. Keep that big OPEX in mind. Stay nimble. Don't get too far out over your skis. And then we'll have a big week next week after all these options roll off and the market resets. I think next week we're going to find out, or at least get some more information. Is this kickback rally a rally within a downtrend, in which case it would fail and roll over, or is it for real and we've seen a low and now we rocket up to higher levels? Hope you have a good day of trading. Hope you had a good week. This has been Chris Best with Traders Profit Compass. Talk to you next time.